looking for. So this is job order costing, which means that we are going to be keeping track of the cost of a particular job, in this example of a guitar. So we are making a guitar, and this will tell us how much it costs us to make the guitar. It will also allow us to keep up with how much we have in our materials inventory, which is our raw materials. Also in our work in process inventory, which is the inventory that is currently being worked on, and in our finished goods inventory, which is the guitars that are ready for sale. And so let's just start at the very beginning. We've got Legend Guitar purchased on account 750 units of raw materials at $14. So this is going out and buying our raw materials. So if we bought 750 at $14, you multiply, and we find that we bought 10,500. So for this particular one, we're going to have materials inventory for 10,500. And we're going to assume, or actually it says that we did this on account, so that will be accounts payable. We promised to pay for it later. So our materials went up, and so did our accounts payable. Alright, raw materials were requisitioned for production as follows. So this means that we have now asked for these raw materials to come onto our manufacturing floor so that we can begin working on them. Because it was able to tell us which jobs they're going to, we know that this is direct materials because it's able to be traced to job 71 and 72. So we'll just do a journal entry for work in process, because we know that we can trace it to a job, and everything that's traceable to a job goes into work in process inventory. And we can do the total, which is 13,000. We'll keep up with how much each individual job is on the job order. And we're taking it out of materials inventory, and we're putting it in work in process inventory. Letter C says during December, we accumulated 350 hours on job 71 and 500 on job 72. The total direct labor incurred at a rate of $10 and $15. So because I can say that these employees worked specifically on a job, I know that I can trace it to a job. When I can trace it to a job, it goes to work in process. So I will do work in process for my direct labor. And it'll be a total of 350 times 10, which is 3,500, plus 500 times 15, which is 7,500. So the total that I'm putting into work in process now is $11,000. I'm going to pay these people. So I set up a wages payable for this. And again, the reason that it goes into work in process is because any kind of direct items go straight to work in process. During December, Legend Guitars incurred the following: glue and sandpaper, utilities, and factory depreciation. So this glue and sandpaper, I wasn't able to tell which job it went to, so that's indirect labor. The utilities is assumed to be factory, and so is the factory depreciation. So all of this is factory overhead, which I will apply later to a specific job through allocation, but for now, all factory overhead gets debited to factory overhead in its entirety. So when I add up 200, 300, 2,000, 900, and 1,200, I get $4,600. Alright, so now we're going to look and see what we credit this to. Well, the glue and sandpaper came from our raw materials inventory, so we need to take it out of our materials inventory because we're now placing it in the factory overhead. And then our indirect labor needs to go to wages payable, because we're going to pay those people, and so that's $2,000. Our utilities will go to accounts payable for $900, and our factory depreciation will be accumulated depreciation. Now notice, in previous chapters what you saw for this would be a wage expense and wages payable, but now we're going to be placing it all into factory overhead to allocate it to our job. Your utilities would have gone to utilities expense, but now we're debiting it to factory overhead because we're going to allocate it to the job. Accumulated depreciation would have gone depreciation expense and accumulated depreciation, but instead of depreciation expense, we're doing it to factory overhead. So all these items would have been expensed before, but because they're in the factory and we're going to capitalize them and place them to a job, they all go to factory overhead. All right, and I need to put in my accumulated depreciation right here of $1,200. All right, letter E says, Legend Guitars estimates the total factory overhead cost will be $50,000 for the year. Direct labor hours are estimated to be 10,000. For Legend Guitars, determine the predetermined factory overhead rate using direct labor hours as the activity base. So this is where we're actually going to allocate our factory overhead to individual jobs. We're going to do that based on a predetermined factory overhead rate, and in this situation, we're going to be using direct labor hours to do that. So the rate is always calculated like this: estimated factory overhead divided by estimated base. So for us, our estimated factory overhead is $50,000 because it tells us that's how much we think we're going to have, because when we first set up this allocation rate, we don't know our actual factory overhead. We don't know we put $4,600 into it. We need the whole year's worth, so we've got to estimate it. And then our estimated direct labor hours, again, we don't know what real ones are, so we're going to use our estimated one, are going to be 10,000. All right, when we divide, we get 5. So our rate that we're going to be using all throughout the year is 5. How do we apply that? What we do is we take actual direct labor, whatever our base is, times our rate, and that's how much we're going to allocate this period. So let's look and see how this works. For job number 71, our actual direct labor hours, we can go up here and find our actual direct labor hours were 350. Because that's how much I actually had. My rate is $5, so when I say 350 times 5, I get $1,750. So that's how much of the factory overhead I'm going to allocate to job 71. For job 72, I look for my actual hours for job 72, and it was 500 as seen right here. My factory overhead rate I'm going to be using for the whole year is 5, so 500 times 5 is going to be 2,500. All right, when I add those two together, I can find out how much I'm going to be allocating. So 1,750 plus 2,500 tells me that my total to allocate is 4,250. So that's a total number right there. Okay, let's see what we do this. We want to allocate. Well, right now we had debited $4,600 to factory overhead, right? We want to allocate some of that out, and according to our rate, we're going to allocate out $4,250. All right, if it has a debit balance, in order to take it out of factory overhead, we'll be crediting factory overhead. And where are we going to put it? Well, whenever we put anything to a job, it's work in process. So work in process is going to get the $4,250, and we're going to take it out of factory overhead because we are allocating it. So in other words, we didn't know how much of this went to job 71 and 72, but based on this estimate, we have just assigned some of it to job 71 and job 72. That's what we've done here when we've allocated our overhead. All right, at the end of the period, we're going to look at factory overhead, and we're going to see whether or not we are over allocated or under allocated, and then we're going to make a journal entry to close that account. So if I look at my factory overhead account, I started off with a $200 credit balance. Then my actual costs were $4,600. That was that indirect labor and that glue and all those items. Okay, that was actual numbers. Then here was my allocated out numbers that I used by getting my actual labor hours times the 5. That's how I figured out how much to allocate. So now I need to find out how much is in that factory overhead account right now. So I started off with $4,600 on a debit, and then I take out $200 and I take out the $4,250, and I find that I've got $150 sitting over here. I need to close factory overhead. I want that balance to be 0. So I'm going to credit factory overhead for $150. And this is an immaterial number, and I'm just going to assume that I've already sold that. So I'm actually going to, and in this chapter we will always do cost of goods sold as the account that we're going to close it out to. It's immaterial. I don't know which job it went to, but I'm going to assume that it already got sold, so I'm going to just expense it in this current period. If my numbers were way off and this was a big number that I needed to close, then I would probably go back in and I would figure out what is causing it to be off. Is my rate, that $5 number, is that off, or is my estimated versus my actuals too far off, and I would make adjustments accordingly. But you will always close factory overhead to cost of goods sold. Alright, now on December the 15th, we completed job 71, which consisted of 20 Jazz Series guitars. So we're going to look and see how much job 71 cost us. When we started, we had a beginning balance of $3,000. Now let's go see how much direct materials we put to job 71. So we're going to scroll up and find where we had direct materials to job 71. And right here, we had $2,000 of direct materials to job 71. So we'll put in $2,000 right here. Then for direct labor, how much did we assign to job 71? So we will go and we will look for our direct labor, which is here, where we assigned 350 hours to job 71. So we pay those people $10 an hour, so it would be 350 times 10, so $3,500 is how much we have for direct labor. The factory overhead that we assigned to job 71, we will look and we will see that job 71 had 350 hours times the $5, so we assigned $1,750 of our factory overhead. When we add up the beginning number plus my direct materials, direct labor, and factory overhead, that will be $3,000 plus $2,000 plus $3,500 plus $1,750. So that entire job cost me $10,250 to make. Now, it was all in work in process, because remember I dumped this to work in process, I put this to work in process, and I put this to work in process. So all these costs are in work in process, but they're finished. So let's take them out of work in process and put them into, not right there, let's do it down here in the journal entry, finished goods, because we can sell those now. Oops. Work in process, 10,250. Alright, so I've taken them out of work in process and shown that they are now finished goods inventory. Alright, on December the 31st, letter H, we're going to sell some guitars. So we're finally going to make a sale here. We sold 40 jazz guitars at $850 each on account. So we have an accounts receivable because those people have promised to pay us later. And it's 40 guitars, and we sold those for $850 each. So 40 times 850 tells us that we are going to receive $34,000 from our customers. And this is a sales, which is a revenue, so we credit our revenue. And then we need to take care of our finished goods because we no longer have those since we just sold 40 of them. We're going to be doing first in, first out, which means that we're going to sell the oldest ones first. So if I look at my inventory list, I see that I had 40 from a previous amount manufactured, and those 40 cost me $500 each. So when I go to sell these, I'm going to take those out of my inventory and put them into my cost of goods sold so that I can match that expense in the same period that I made this sale right here. Alright, so it'll be 40 times $500 each, which is $20,000. And I need to take that out of my finished goods because it has now been sold. Okay, so let's look at this inventory list to make sure we understand. We had some manufactured from a previous period that only cost us $500. Now we just sold all 40 of those for $20,000. We sold them for more than that. That's how much we originally paid for them right here. And then now we have just now finished manufacturing job 71. So the next ones that we sell, our original cost will be a little bit higher. It will be $512.50. So that is the journal entries that you will be doing for Chapter 19. Let me know if you have any questions.